Hello to those who are trying to evaluate the situation in the market in these turbulent times. We have prepared the outlook for this week, but we'll start with the overview of the previous weekly session. The US stock market is currently displaying direct correlation with the geopolitical situation. Despite a strong report on US employment, major stock indexes closed last week with a decline. Instead of a reversal, Monday was marked with extreme volatility in the oil and gas market. In our review, we will analyze how the geopolitical factor in the oil rally has influenced some trading instruments. With a major index, the S&P 500. In the early trading session, futures on the S&P 500 index lost 0.7% and continued to fall later in the day. The explanation is simple. The US stock market is strongly influenced by the situation in Ukraine. In addition to business and political factors, a sharp rise in oil quotes also weighed on the index. Higher oil prices may potentially lead to the accelerated inflation in the United States, which is already a big issue for the country. The US has already announced its plans to block all imports of Russian oil. In theory, oil-producing countries agreed to release 60 million barrels of oil in order to curb the prices, but no one knows how this will affect the energy market in practice. If Ukraine and Russia fail to reach an agreement, Western countries will have no other choice but to impose tough economic sanctions. Today, the hope for a peaceful outcome of negotiations is slim. This means that the S&P 500 is likely to depreciate further to 4,300 points. In an alternative scenario, the index may start to rise towards 4,370, although there are no reasons for this at the moment. As for the macroeconomic reports this week, markets will focus on inflation data in the US for February. That is due to released on Thursday. Amid the tense geopolitical situation in Ukraine, the US dollar index keeps conquering new highs. Apparently, against this backdrop, commodities are set to increase in value together with a greenback, while shares will continue to fall. In addition to steady growth, the US dollar index opened the session with a gap, having jumped by 0.38%, so the dollar is sure to extend its rally in the near term. According to analysts, the quote may stay in the channel between 98.50 and 99.10. Yet, instead of a pullback, it's more likely to move further to the level of 100 points. Speaking of USD CAD pair, the pair is moving in the sideways channel. A spike in oil prices is pushing the quote down, but the greenback is preventing the price from falling. Overall, the loonie is relatively strong. Amid a decrease in the infection rate in Canada, some restrictions have been lifted. Moreover, business activity is increasing, providing additional support for the Canadian dollar. Above all else, the loonie is a commodity currency, which means the deeper the fear of the scarcity of commodity, the greater the potential for a stronger loonie. However, the same fear is driving the greenback up. Under such circumstances, the pair is expected to trade in the range between 1.26 and 1.28. A downward reversal signal will be made if the quote settles below 1.26. On a Monday, Bitcoin extended the bear run. The coin is expected to remain bearish for several days. So far, there is still a correlation between the asset and big tech stocks. Overall, the uptrend may resume if geopolitical tensions build up. Bitcoin has lost $2,000 over the weekend. Market players seem to be bearish after they have tried to break through $45,000 twice. In the daily time frame, the price is hovering in the range between $37,500 and $39,300. As we can see, the US market as well as world markets in general keep trading under the influence of the situation in Ukraine. Macroeconomic indicators and technical analysis tools are now fading into the background, while assets are driven by news from the geopolitical and economic fronts. Clearly, peace talks between the parties will set the tone for the market. In any case, we will be able to see the market's reaction and analyze the situation already tomorrow. That's it for today. Until next time. See you tomorrow.